Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 14th of February. There has been a slight settling down of risk appetite, or should I say risk aversion really, following on from yesterday's knee-jerk reaction back into safety away from higher risk asset plays that resulted from the Chinese redefining how cases of coronavirus would be recorded. The shock of that much bigger number really did reverberate through markets yesterday, but that reverberation has started to settle down now. We've seen that the strong moves which we saw initially lower on Treasury yields have just settled down a bit, edging a little bit lower this morning from yesterday's close, but still way off yesterday's low on these Treasury yields. Also, we've seen that the initial spike higher in volatility has unwound. We saw that the dollar, which strengthened yesterday, is just sort of holding ground a little bit today. We saw, for example, the oil price, which has been looking to recover, initially spiked low yesterday, then rebounded and is sort of holding that rebound again today. So that initial knee-jerk reaction has just basically seems to have played out now. Markets are starting to reassess how they view the coronavirus once again and the impact on asset prices going forward. We've got the gold price, which tried to push higher and break out above near-term resistance yesterday, just sort of coming back a little bit inside resistance. It's still holding ground a little bit today, but it's interesting that gold hasn't continued to push on. Equities, a shade lower on European markets. We saw the Wall Street indices closing lower yesterday, only slightly, and that mild unwind on Wall Street has basically, according to futures anyway, starting to sort of tick higher again. So it looks as though that we're seeing a little bit of a consolidation basically in front of some key data points later today. Those key data points are Eurozone flash GDP at 10 o'clock. Now what we have had what we have seen is the German data, which has actually mildly surprised to the downside on the quarterly GDP. So flat on the quarter of Q4 for GDP. What does that do for Eurozone data later on at 10 o'clock today? We've got the flash reading, which is the second reading of quarterly GDP for the Eurozone, and expected to be 0.1%. But with Germany missing to the downside, could that also miss to the downside? So we're looking out for that at 10 o'clock. Then into the afternoon, we've got the US data. The retail sales for January is expected to be on a core basis, which is ex-autos, plus 0.3%. So that's a pretty decent rise again. Decent numbers there for the retail sales. Also look out for the retail control, which is the sort of more targeted sales data. And then later, 2:15 UK time, you've got industrial production expected to deteriorate again by negative 0.2% in January. And also we're looking out for the Michigan sentiment data. Now Michigan sentiment is important, I think, as it gives a good indication of how the US consumer is reacting. Now let me show you how Michigan sentiment comes through. Michigan sentiment, we've seen, sorry, it's not that one. We've seen that a pick up actually above to 99.8 in recent months. Now it's expected to come back to 99.5 today, but that drag back is expected to come through the current conditions falling. Sorry, the expectations falling back slightly. Now let me show you the data again to see that. Expectations to be falling back slightly to 90.3 could be the reason why we see that. So watch out for that today and how the expectations on Michigan sentiment really does play out. So okay, so that takes me on to my chart of the day, which is the Euro Sterling chart. Now, as I said in the morning report, I could have talked about any number of euro cross charts in the forex space today, but I picked euro sterling, and what we've seen is a sharp move to the downside. We saw sterling sharply high yesterday as there was a reshuffle in the Prime Minister's cabinet, for the UK, and a suggestion that there's going to be more of a fiscal easing of policy, so fiscal loosening, I should say, and that would help the UK economy, presumably, and that certainly dragged sterling strength yesterday, but also euro under pressure, continued euro under pressure. A bit of a consolidation early today, but euro under pressure is likely to be a big mover in the next few days. Now, we've seen that on euro sterling, we've seen that the market has been pulling back to test this 82.75 crucial low. Look at how important that low is. That's basically the lowest you've seen on euro sterling since the initial spike higher following on from the Brexit vote decision in the UK. So it is a really key support, that 82.75 level. We've seen a test of that yesterday, 82.95. But look at these momentum indicators. They're all negatively configured, but also with further downside potential. MACD lines falling, stochastics falling, RSI 35. Tends to go below 30, doesn't it, on those bear runs. So we could see that there is further downside potential in this move, and I think euro sterling possibly to test that 82.75 in due course. Now, the breakdown below 83.90 means that that is now resistance of overhead supply. 83.90, 83.85 overhead supply in the last few weeks. And any unwind, I think, is likely to be seen as a chance to sell on euro sterling, which remains under pressure. A little bit of a rebound today, a little bit of a technical rally starting to come through as sterling has dropped off. But I think that once that plays out, we're expected to see continued weakness on euro sterling. You can see that there is a trend lower of lower highs, lower lows in the last few days. That comes in around the 83.65 mark, so not too far off from where we are now. But I wish you good luck in your trading today. Click here to sign up to our daily analysis videos, and also go to our website to sign up for our webinars.